everyone, and thank you for tuning into the North Main Minute. I'm Joshua Dobie. One of the things that we watch daily, and I'm sure it's intuitive just by what I'm going to say next, but as we're getting to the year end, we tend to want to look back a little bit at what this calendar has been, and that has to do with the overall market performance. And I'm going to speak specifically here in a few moments to markets that have to do with equities or stock markets. And specifically, if you look at some of the most popular indexes out there, they look like they've had positive years. Now, when I say they look like, they actually have in terms of how they're computed, but I want you to be wary of the numbers that are inside of those indexes because of how they're computed. I'm not going to get into the real granular academic definitions on them. What I just want to, about which I want to make you aware, is just to be alert to the fact that when you see a positive performance inside of an index, frankly, the same thing's true on the negative side. But this year, when you see the positive performance on the index, it may not be because all the companies inside of that index, or even most of the companies inside of that index, had a good year. As a matter of fact, it may just be a handful of companies that have done well. That certainly is the case this year. That's why we're saying be wary. Second big thing, and we see this a lot with portfolios that come to us, which from folks who are new to North Main Financial Group, make sure that you're diversified. It gets real easy. If you've had a certain part of your portfolio do very, very well and other parts which have been more modest, you can get unnaturally weighted in those parts which have done very, very well. And so long as that continues to be the case, you may really like that. However, there's another side to that mountain, and certainly a pullback when things have done very, very well is a likely scenario in some measure sooner rather than later. It's just the reversion to the mean idea, and that's the kind of thing that you want to watch and hopefully avoid if you're looking at reallocation or staying diversified inside of your portfolio. Third big item, especially as we're getting here to the end of the year and looking into next year, don't get caught up in the hot ideas. Don't get caught up in those things when looking back, they may have been very, very good. Logically, even though a lot of folks don't do this, you want to look forward to what may be coming next. And that's why it's very, very important to take the emotional aspect out of looking at portfolio management, because if you get too caught up in it, like anybody else, we all want to get into the spaces which have done very, very well because we tend to think in straight lines as an investing public. But it's just not the case. Most often, things run in cycles. Peaks, valleys, and a whole lot of time in between. So make sure you don't get too caught up in whatever's hot in the moment. If you'd like to reach out to us at North Main Financial Group, perhaps take a look at your portfolio. Are you balanced correctly? Are you allocated well for what it is that you desire to do? We'd love to hear from you. NorthMainFinancial.com.